Tough week overall. Let's take a look at our market issues. And of course, the whole world is down 1.5%. Doesn't matter. Nikkei, Shanghai, the whole thing's down over in Europe as well. Trade tariff war escalations. We got some Brexit uncertainty, too. We got some crummy European economic data. European PMI numbers were below expectations. We're in the 40s in that area. And don't forget that dollar strength. We're at a 2-year high on the dollar index, essentially, partly due to some weakness in sterling. But that's also affecting the overall markets here. Sectors, the usual trade-related sectors, once again, semiconductors, energy a little weak here. China, ETFs have been down all throughout the week. Metals and mining, another classic trade-related name, all on the weak side. The Dow names, well, again, all trade-related. Dow DuPont is just is a football, essentially, getting kicked around constantly. Intel, Boeing, Apple. Remember, Apple was 210 or so a few weeks ago. Down again today. United Technology, again, all trade-related names. Is this a drag on earnings? That's what everybody's trying to figure out. That's what I care about. I want to figure out what's going on in the third and fourth quarter numbers. The retailers have been out this week talking. Home Depot said this could cost $1 billion a year if we had these new tariffs coming in. JCPenney said there would be a meaningful impact from further escalation in the tariff wars. Kohl's lowered their numbers by 11% and said tariffs were cutting into their profit outlook. Now, if you look at the retailers, it's been a horrific week. Obviously, Kohl's is down 20% this week. Easily. But you notice Best Buy down here today, and yet they had terrific numbers overall. They surprised the whole street by essentially coming in and affirming their full-year guidance and doing a little bit better on their numbers than expected. But here's what they said. They affirmed the full-year guidance. They went very cleverly on the conference call, minimizing the impact of tariffs by buying products ahead of the tariffs. And they said it was premature to speculate. They wouldn't give any. They're working on their guidance, assuming that they're not going to have that third tranche come in, or the new tranche come in of 25% on $300 billion of additional. So they're sort of saying we're not going to even talk about that right now. But you see the market is already taking down, and other firms are taking the numbers down. Nomura was out with numbers this morning saying $300 billion in imports at a 25% rate. Let's look at what that's going to do. They said tariffs would be unlikely before the G20 meeting, but they think they will be imposed in June or early July. And that's what the street is essentially doing right now. It's trying to figure in the likelihood that we're going to have tariffs impacting third and fourth quarter earnings estimates. Finally, just want to note a couple of high-flying IPOs are down a bit, some of them more notably than others. Remember Luckin Coffee last week went public at $17, went to $25 on the first day. It is now below the IPO price. Happened yesterday. 17 is the IPO price. You see it at $13.91. Finally, Beyond Meat, the great classic here, they went at $25, remember, and they went all the way to $95, $25 to $95. And you see down here, though, it's $80, well off from the high, but still quite a high flyer for the year. Best performer.